going on YouTube? Thanks for tuning in this video. I'm Nash, and in this video, we're gonna talk about owner financing. What is it? How's it used? Should you use it? What's some of my experience? Is it something good to do when you're getting involved in real estate? We're gonna talk about it. But first, I wanna break down the terms. So owner financing or seller financing is essentially three parties involved. There's the owner who's selling their property, there's the buyer who's wanting to buy the property, and then there's a contract that binds the two, which is called a note. And essentially what owner financing is, in general terms, is it's a rent-to-own situation. So the buyer is looking for a property, the seller is looking to sell their property, and typically there is something that kind of hinders the buyer from being able to go through a typical bank or obtain a typical loan. And so essentially the owner becomes the bank. And there's some risk involved for both sides, but it allows for more flexibility. And the most important part between the two is the contract that binds them together, because the contract holds everything. And also a very vital part of that contract is the fact that that contract can be sold at any time. That contract can be sold at any time for cash. But that depends on the way in which the contract is written, because typically the seller is going to have more freedom. Obviously, they're going to be in more control because they have the asset, and they essentially are risking the asset by selling it to you, the buyer, or whoever the buyer is. And so they have more risk, and so they want to make sure that they write in more of a friendly contract that's going to help them. But this can be really helpful when you're getting started in real estate, because a lot of you may not have the best credit. You may not be able to get access to loans. You may just want a little bit more flexibility. I think owner financing is really going to help you in that situation. And I want to talk a little bit about my experience with it. So I got started in owner financing probably like 4 years ago, about 4 years ago. And how I started in owner financing was I began with mobile homes. So essentially I would buy these really cheap mobile homes, I would fix them up, and then I would sell them to a buyer, and I would sell them in owner financing. And in owner financing, typically the buyer is going to put a down payment. It's anywhere usually from like 10 to 15%, followed by monthly payments. So in the contract, you make sure to write out, and the contract, it differs for whatever project you're doing. But essentially the seller can put in whatever kind of terms that he wants, and the owner the buyer has to abide by those terms. So you can charge whatever interest rate you want as long as it's within the legal limit. But typically you're gonna calculate what works for you, whatever the numbers are, and you put the time frame, the X amount of years, the X amount of interest rate, and it's a way for you to make more long-term cash flow. And it's pretty hands-off in the sense that once you sell the property, you're kind of hands-off. You're just making sure you're getting your payments. Now, where I live in Texas, it's very easy to get your land back or your property back if the buyer does not make their payments. So that's a super important thing. Wherever you're at, make sure you're in a landlord-friendly state, and that contract can withhold, so that if needed, you can take back your property, which is obviously not our intent. We don't want to rip property away from people if we don't need to, but that is an important aspect, that if they fail on their promises, they fail to make due on that contract, that you can take back your asset. So there is a risk on both sides, but this can be really helpful. I use it a lot, and a lot of things that the process that people don't think about is the note selling aspect. So there are actually a lot of investors out there that buy owner financing contracts. So essentially, and I've done this actually a couple times, is I had a couple mobile homes, I bought them, fixed them up, I'd sell them to a buyer, I'd get a good down payment, I would hold that contract for about a year, so I'd be collecting money for about a year, and then I would actually go and sell that contract to an investor. So the investor would give me about roughly 80 cents on the dollar. So let's say I have a property that's worth $100,000, left in debt, essentially. So the seller owes me $100,000. An investor will come and say, hey, we'll buy that off you for cash for 80 grand. So it's almost like you're getting what would have been the cash purchase of it. So that's a good thing to keep in your back pocket. If you have a property and you want cash in the future, you can write up in the note that, hey, this can be sold for cash at any time. But essentially, owner financing is like a rent-to-own situation. There's typically two parties involved with a contract, which is super important, and the terms can be negotiated on. So you can make it anything from, I've done contracts as as short as 5 years. I've done a 5-year contract where the buyer puts a down payment and they're paying for 5 years. You can do as long as 30 years, 10 years, 20 years, 15. Really depends on you. Also, the interest rate, that depends on you. Obviously, it has to be something to where you can make a good interest rate and make a return on your money. I think in Texas, the legal limit is 10% on any private property, I believe. So just kind of keep that in mind for what state you're in. What's the legal limit? Because I think there are some limits. But that's kind of an important thing to think about. And what are kind of some of the pros of being involved in owner finance as a seller and as a buyer? Well, as a buyer, you're going to definitely be cutting through the bank, so you're not going to be having to use a realtor. You're not going to be having to do, some people, if they're selling something in owner financing, they are going to require a credit check, but the negotiation is probably the biggest factor when you're buying through owner financing, is the fact that you can set up the terms with the with the seller. You can set up the terms how you like and try to negotiate with him and try to find a common ground. But typically you're going to need to pay about 10 to 15% down payment, followed by monthly payments. So this can be very beneficial for you because you can get started right away. You don't have to go through a bank. There's no credit checks typically. That can be really beneficial for you. For example, I actually have an RV park right now, and I got a really good deal on owner financing on the land. So I bought 10 acres of land, and the owners were willing to do what's called owner finance, which obviously we've been talking about that. But it was very beneficial for us because they were selling the property for $85,000, and they wanted about a 15% down payment, which is $13,000, followed by monthly payments of $619 for 30 years at a 6.5% interest rate. And for us, that was awesome because we now rent each RV spot for $550. So almost just one RV spot, and that payment is we're almost already profiting. Our debt is almost already covered. So typically, there's going to be about a 10 to 15% interest rate. But that was really nice for us because we got in the game really easily. We didn't have to take on a loan, and we were able to just get started right away. And that was huge for us. And that gave us a lot of flexibility, allowed us to leverage. And if you're the owners and you're selling an owner financing, you definitely want to make sure that you require a large enough down payment so that in the unfortunate event that you need to take back the property, you have enough funds to be able to cover any lawyer fees if there are any. And that's really important because some people they just want to try to get a buyer in there, and so they don't really require much of a down payment. And then if the buyer defaults, they have to take back the property and the owner's having to shell out cash. But if you require a good enough down payment, I would say at least 10 to 15%. If that buyer within a short time defaults on their payment, you can just use their down payment to pay any lawyer fees that you need to get them out when they take the property back from you. And that's pretty important because you don't want to have to tap into your own funds. So you can set it up however you want. Some people might do a little bit more, sometimes people might do a little bit less, but typically it's anywhere from 10 to 15%. Also make sure it's a good enough cash flow number that works with your numbers. If you're the buyer, make sure it's something that is enough for you to be able to, if you're going to do some kind of business or some kind of rental, that it's enough for you. But really as a seller, it is very nice to have that cash flow coming in because it's almost like a rental, but really there's no micromanagement needed, and it could be very lucrative for you. The only thing that is a downside to it is that it does have an ending point. So with rentals, there's no ending point. As long as there's somebody in your property, there's no term. I mean, there's maybe some leases and stuff like that, but essentially the property is yours. You can continually keep renting it out. Whereas with owner financing, you sell it in the contract and you have a certain term, whether it's 10 years, 20 years, where you'll be receiving those funds, but once it's done, it's done. But it can be very lucrative for you because you can make cash flow without doing anything really at all. Essentially just making sure they're making their payments, but that's pretty straightforward. So when should you do owner financing? I think it depends on you. I think it depends on the situation. I think if you have a very good plan, let's say for instance, you're doing something similar to what I did. If you have a property that is a blank slate and you have a plan to maybe transform it into an RV park or maybe you found a house that you're looking to renovate and rent out. You just have to crunch the numbers and make sure it works. But if the potential net operating income is more than enough to be able to make that payment to the property owner who's owner financing it to you, it's a great idea. It's a great way to get started. You don't have to deal with any realtors. You don't have to deal with any banks. It's just you and the owner. And that can be really, really beneficial for you. Can really help you just get started right away. And I think for the seller, you should do it when you're maybe not in as much of a crunch for cash. You don't really need cash as much. But I would definitely write in the contract that the contract can be sold at any time, because that's also a nice thing to have in your back pocket. And I think with owner financing, it gives you a little bit more flexibility. So let's say, for instance, you have a property and you just kind of want to get rid of it. And maybe, for instance, like the appreciation's a little high, but it's coming down and maybe you're not able to get the price that you want. If you sell it in owner financing, worst case scenario, you're just going to start getting money right away, and then at any time you can just go ahead and sell that property. A lot of the time you need to wait to have that note seasoned, which a seasoned note just means that somebody's been paying it for a while, so there's a responsible buyer in the property. So season that note maybe for a year or two, and then go to investors. The way that I found note buyers was I just posted on Craigslist and said selling property through owner financing note, looking for note buyers. And I got a lot of people contacting me, and a guy in Florida bought my owner financing note from me. We talked with a lawyer, and we got it all sketched up and everything, and it took probably like 2 weeks of talking with a lawyer and talking with the buyer, the investor rather. And yeah, he came in and he bought out our spot, and now the house that we sold, the tenant's still in there, and now the tenant makes the payments to him, not us. And that was very lucrative for us. We got about 80 cents on the dollar, and we pretty much got what would have been a cash purchase. So that's really important for you, if you're the seller, to write in the terms that at any time it can be sold. And that kind of gives you the lucrative option to be able to just receive cash right away. And then at any time when you want to just sell that note, you can just go to a note buyer, and you don't need to ask permission from the renter, because it's your property. And you have a lot of the rights too when it comes to taking back the property if you need to. That's a very important thing. And also too, I write in the owner financing contract that any lawyer fees are paid by the buyer too. So if need be, if I have to take that property back, you're paying the lawyer fees, not me. So that's a very important thing. How do you do it? I would say just, if you find a seller, ideally the thing is you want to try to find properties that are not on the MLS, just privately owned, for sale by owner, and start negotiating with them, start talking to them about owner financing, kind of really going directly to the seller versus going through a real estate agency or a real estate agent, because the real estate agent's trying to get the commission, but the seller of the real estate is just trying to get that real estate sold. So if you can make a good deal for them to where it's lucrative for them, to where they can make a good enough cash flow number, but it works for you as well as the buyer, I would say definitely you should do owner financing. I think it can be really lucrative for you. It's something that I definitely recommend. I've done it many times, and it's allowed me to get an RV park started with only $619 a month. I mean, where can you do that for $619 a month? Really, really just something I recommend. And I think it really comes down to negotiation with the seller and trying to get something that's incentivized for them to where they can get cash flow, and at any time they can sell out. And as long as you're getting the property for a good price, and you have a number every month that you can hit, you have a good plan, I definitely recommend it. But thanks for watching, guys. If you like this video, please hit subscribe. Please comment if you have any questions. Please put a thumbs up if you want to see more of these videos. I really appreciate you watching. I really appreciate all the emails and comments. Really, really appreciate it on my end. But thank you so much. Have a blessed day. Thanks for tuning in. Bye-bye.